Good evening. This side Rahul Magan here is a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. We are a multinational hedge fund and we take positions in multiple asset classes of the globe. And of course, 100% profitable hedge fund. But having said that, our hedge fund is prop in nature, which means no third party, whether you are a venture capitalist, you are a private equity, or whosoever are you, you can invest capital in our fund. We are a 100% proprietary hedge fund. And of course, as an organization, as a legal entity, we are 100% profitable. Guys, research is the most powerful tool you have in the world. The more time you spare on the research, the more information you get about the markets. This is something which is very, very clear. Few days ago, Axis Mutual Fund Frontrunning Scandal came into the picture. And this isn't the first time when Indian Mutual Fund did the front running. And I raised my voice on the social media. Rather, I uploaded two separate videos on Axis Mutual Fund front running, one in English and one in Hindi. And both are live on the YouTube channel. And I was like, the knowledge level of our media is so pathetic that they do not aware that front running is of two types. Number one, which is on the buy side. Number two, which is on the sell side. But anyways, this is India, how India works. And from the last several years, I'm raising this voice, at least from the last 2 years, I'm raising this voice that Indian mutual funds now started investing in loss-making companies. Today, as we speak, Zomato touched 52. And if this trend persists, probably for another few weeks, I would say, then Zomato might be touching 20 rupees also. Then what happened? It's a panic selling. Because Zomato touched the highest of 169. And then the people who invested in 169, they start selling their stocks. Which means it's a panic selling. According to the public information, if we compare Zomato from the peak of 169 to today 52, more than 70%, I repeat, more than 70% of the investment value has been eroded. And according to the same information, this tantamount to 100,000 crores, which means 1 lakh crores, also known as 1 trillion. So 1 trillion worth rupees, 1 trillion worth of investment has been shaved off. But not a single business channel of India, not Indian regulator dare to agree that we gave approval to loss-making companies. Tomorrow, which is 11th May 2021, Delhivary IPO is coming into the picture. And according to the public information which I collated, Delhivary in the last 4 years, which is financial year 18, financial year 19, 20 and 21, reported a loss of 3,200 crores. You heard me very right. Delhivary reported a loss of 3,200 crores in the last 4 years, which means on an average, Delhivary reported a loss of 800 crores. And in the draft red herring prospectus, Delhivary made it very clear and straightforward that the losses would continue in the long run also. Irrespective of that, they got the approval to raise the money. And as far as the public information is concerned, now they are raising 5,235 crores from the earlier projection of 7,460 crores. Out of 5,235 crores, near about 2,400 is the anchor portion. Anchor means the institutional investors, in short. And you would be surprised to know that according to the public information printed from Money Control website, ICICI Prudential Flexi Cap Fund, HDFC Life and Mid Cap Fund, and entities from SBI, IDFC, IIFL were part of anchor investor list. It raises a big question to me, probably if not to many people, that the mutual funds who invested in Zomato, Paytm, Policybazaar, and all the loss-making companies, their all investments are in losses. Who is paying? Investor is paying. And now, irrespective of having this as a history, mutual funds invested the retail investor money in another loss-making company. Isn't a fraud? Isn't a front running? Knowing that I am investing in a company who is a loss-making company, knowing a company in a draft red herring prospectus clearly mentioned that in future also they would continue to be in losses. ICICI Prudential Mutual Flexi Cap Fund, HDFC Large and Mid Cap Fund, SBI, IDFC and IIFL invested the money in loss-making companies. Indian retail investors invest money in mutual fund assuming the portfolio investors would do the justice. And this is the justice. But I'm sure tomorrow, I don't know, whatever price Delhivary would subscribe, but wait for it. Just like we waited for Paytm, we waited for Zomato, we waited for Policybazaar, we waited for Cartrade, we waited for many loss-making companies. Now all are available at throwaway prices. Wait for Delhivary. Because the company who raised so much money from the venture capitalist and the private equity firm, if after raising this huge money, they become a loss-making company, how would they be a profitable company after the IPO? Even a 10th failed person understand that. I doubt whether our regulator understand this or not. Anyways, this is Rahul Magan from Treasury Consulting. You knew my personal number 9899242978. I repeat 9899242978.